are prepared to break the silence, I'll be out in the sunshine, running beside the lion. I've been feeling down, but I've been looking up.
Hello, welcome back to WINFXTRADING YouTube channel, the only channel that has been optimized to make you rich trading the forex synthetic market. If this is your first time of visiting my channel, do your best to subscribe and turn on that bell notification so that you get notified each time I upload any content. Try to comment, like and share so that YouTube pushes to high level of audience, and that will make me to have more motivation to create quality content in future. In today's video, we discuss about beginners, experts, Deriv, price action, manipulations, grow small accounts faster. So let's read together: beginners, experts, Deriv, price action, manipulations, grow small accounts faster. Okay, you need to be aware of this. Okay, for the meantime, I'm going to be using this title, but the title you might see on the upload might differ a little bit, but it's still actually the same thing. Okay, so we shall be discussing weekly, monthly polarity, fake support, resistance, look for breakout in daily, H4, H1, refine in M30 to M1, trade in the direction of trend and breakout. See, what Deriv used to make a lot of people blow account is breakouts. Breakouts around fake support and resistance, and the fact that Deriv price action always tend to maintain trend. They tend to maintain trend and start creating a psychological behavior in you to trade against that trend. And 80% of trader to 90% of trader trade against trend because of this psychological behavior that the broker creates in you. You feel mercy for the market, that this market has been going in a particular trend for a long time, so it have to change, and then you will force a trend to change, not by the broker but by you, not by the liquidity provider but by you, not by the institution, just by you as a retail trader. That is why a lot of people gonna lose more money. It's possible that it's probably that 100% trader is going to lose more money, apart from people like us. And that's why in my VIP, what I do is I spend weeks, days, weeks, months analyzing group of assets and knowing the location of entries, signals. I get me, and that's why my VIP subscribers always win. That is why I am WINFXTRADING. Okay, so that's good. There is something I have not mentioned here that is very, very necessary. It's very, very necessary. Okay. And what it is that the Deriv asset, the volatility asset or other Deriv asset are designed to be hard. That, honestly speaking, they are designed to be hard and confusing. It promises a lot of money only for people like us. It's not everybody. Don't mind all those people that are flattering on the social media. They're all scammers. They will tell you for investment, they will scam you, they will block you. They're all scammers. They don't make money in Deriv. They don't know anything. They don't make money in Deriv. So start changing your mindset by joining my VIP and make money in real time. I'm with you. Our risk management is very, very powerful and strategic. We don't risk more than 10%. Highest is 10%. So we risk from 5% to 10% for practical cases. because the idea of risking 1% to 2% is not practical. It's not practical. You can't be making small profit when you see opportunity. Okay, you need to, when you see the fixed opportunity, a real opportunity, you need to use at least 5% of your equity or 10%, because you are sure. But if you are not sure, then you can use 2% if you are not sure. So we have a high level profile risk management techniques. Okay, that's by the way. So I want to explain, like I want to digest each of these points and make sure they colorate well, so that you learn something. At least. If you didn't learn anything in this video, I want you to learn that Deriv is designed in such a way to make 100% traders lose. All of them will lose. Even if you make $10,000, Deriv will make you to go and sell your land. Maybe when you have made that $10,000 and then you blow it, then after blowing it, it will tell you to go and sell your land, that you will make more. You will sell your land and still blow that. Oh my goodness, you will sell your land and still blow the money. So we have the power. This is idealistic, like idol. There are people that are created for a particular purpose. No matter how you try, you need to make those people for you to succeed. Are you getting it? So that is by the way. Let me take you to the charts. Okay, so you see what is happening here, right? This is V10. You see this? Let me color it with blue. This is a fake support. It's not a support, but a lot of people will believe this need to be a support, but it's fake support. Why? Any support you see in a downtrending market is fake support in the first place. Yes. Unless it is a strictly strongly ranging market in higher time frame. For a downtrending market where you notice a support, that support is fake, believe it or not. Then for uptrending market where you see a resistance, that resistance is what? Fake. If you want to know why it is fake, join my Telegram channel and ask me, Daniel, why is it fake? I will tell you. But it's very apparent and clear. It's very clear. It's very obvious. How can you tell me that in the uptrending market the resistance there is going to hold? Why? What is trending? A trending market is a market that creates new points, create levels, or create new swing point at different levels. Like that is a level shift. For higher trend, for uptrend, the level is higher levels, like swing high, new swing high, higher highs. And for downtrend, it is what? Lower low. You see, high. These are higher highs. The previous highs, the current high is in such a way that it is higher than the previous highs. For downtrend, like this one that is happening here, you notice that the lower low is in such a way, any current low should be in such a way that it should be lower than the previous low. This is previous, this is current, for instance, or this is current here, so it's lower than this one, this low. The lows and highs are swing point where a market forms something like V. The market forms something like V or inverted V. The market actually change direction, because it just follow the arrow. See that it's changing direction, coming down. This is coming down again. So it's a swing. Are you getting it? So that is a swing low. A swing high, start from high, and then a kind of drop. That'll be a drop. When that drop happens, then it becomes a swing high. But it depends in the trend where it occurs. For a downtrend, a swing high is called a lower high, and for uptrend, a swing high is called a higher high. Okay. I don't want to go deep, but it's a simple thing. Understand my English. We can have lower low. These are operators, operators of swing point, operators of swing point in a price action driven market. Or just like in mathematics, we have plus, minus signs and division as operators. We talk about operators also in price action of market. So we have swing high, swing low. So then we have types of highs: higher highs, lower high. Then for low, higher low, lower low. So the low is operator. Higher is operator, lower is operator. They operate on high, they operate on low. So left for you to know what it is. So for downtrend, let me summarize this. Use your pens, start writing right now. I talk more than I write, so you should be the one to write. Bring out your pen, write. In a downtrend, the basic operators are lower high, like this one, here, this point, this one, lower high. This is a high, but it's lower because it's in a downtrend. And lower low, this is a lower low because it's a downtrend. So let's go to the uptrend part of the market. Let's see a market that is uptrend. This like very strong uptrend. Yeah, this is a very strong uptrend. You see something like this, and something like this. I'll be very fast in this video, but yet comprehensible, so you don't have anything to lose. You have to gain here. I get it. But don't forget that we are the owner of the market. We are the ideal carrier. Try to join VIP, okay? So we see something like this. See something like this. See something like this. See something like this. Okay. Also, if you're a fund manager, like if you're a management company, you can affiliate with me to be your manager. Like if you have up to $1 million account, like you are managing community, you are managing big investors, like a lot of investors are investing with you, but you don't know how to trade, but you're looking for somebody that is expert, you can affiliate with me. All you need to do at the end, you give me 40%. I don't collect much. I promise you, I'm gonna triple your account, I'm gonna double your account, I'm gonna give you 5 times, 10 times, depending on the duration and how powerful these signals are. But there's nothing like loss. No. I told you I have the idol, so I don't brag. So you see this. Let's make it real. Okay, so bring another one. So in uptrend, this is higher, right? This is higher low. It's a low, but it's higher low. And this is a high, but it's higher high. So any resistance you see in uptrending market is a fake resistance. No matter how it intersects with a nearby similar resistance. Take for instance, we see this point. I say this point is having an affair with this point here in a trend, with this zone, with this trending channel is having an affair let's delete this and pick again. So that zone is having an affair, so let me delete it with it. But that does not make it real. It's fake because the market is uptrending. The moving average 200 which is the black moving average, already tells us the truth that this market is uptrend, because the price action is above the moving average 200. So this resistance here is fake. Even though it has multiple reactions, 1, 2, 3, 4, these are like they can make it up to 10, but I'm telling you the truth, this can make you to have a negative statistical edge with the market. And once you have a negative statistical edge, you're supposed to know. I will drop a video in the description of this video. Like I will drop a link to watch a video that talk about statistical edge. If you have a negative statistical edge, you will not make a dime, you will not make any profit. In that video, actually introduce a formula like a GP or geometric progression, sum of GP or sum of geometric progression formula that we actually tell you how much profit you're gonna make in future, if you have a positive or statistical age. But if you have a negative statistical age or some statistical age below 5%, no matter how you try, you will never make it in forex. I get it. You'll never make it in synthetic market. So that is it. So we notice that this is what we see, that these operators are real. So I have mentioned about these operators that are very important. You have to know them, that if a market is going uptrend, is making higher high and higher low. If a market is going downtrend, it's making lower high and lower low. Okay, then I state any resistance in uptrending market is what? Fake. And any support like this one, this idiot that call herself support, don't know what it call herself. It will mislead a lot of people will buy here, but they are gonna lose. They are going to buy the support, isn't it? But you're gonna lose. What are you buying? I will tell you why you will lose. What are you buying? You are buying nonsense. See, it promises you that if you buy, you make it, isn't it? It promises you to buy, because it bought here. All these structures are manipulations. There are methods by which the broker psychologically hijack your brain. Like, once you capture human mind, once you're able to confuse human being, once you're able to capture the subconscious of a man, you can control the man. So what makes you lose is that the broker control you by the way the price behave, and you didn't even understand how the price behave. One thing you need to know is, if you are trading, you must be very, very specific. You must be very, very aware of who is in control. And it is always the broker that is in control. The liquidity provider and the institutions, like big traders, like big investors, like banks and big account managers, they are the one in control. Those that have big money in the market, they are the one in control. They are the one that move the market. You must have this idea. I didn't put it in the script, but you must have this idea. You must know who is in control. Knowing who is in control is even more than the trend. Knowing the trend is important, but who is in control is about 90 to 95% of what will make you to succeed. Okay, why trend will contribute 80%, 70%, because trend can change. You must know who is in control. Like currently now, sellers are in control of this market. Why? This is a fake support, number one. Then let's go. That's why I say, let me go back to the script. I made mention of weekly or monthly polarity. So we see. Let's go to the month. I'm going to delete most of these averages so you see everything clearly. Okay, so This is the month. What I see? Check the week and check the body. Check the week, check where it open and where it is now. It open here up and it is now. This is a bearish monthly candle. Now this month is September 29. I know it is about to end. Okay, this month is about to end. We are entering next month. Okay, but the truth is that this market is in downtrend, whether you like it or not. So knowing the polarity, knowing the trend, they contribute 90 to 95% of success in trading. Now, see, you need to know the polarity. The polarity is bearish, isn't it? Next month is going to begin in 2 to 3 days ahead. Are you getting it? So we don't know how it's gonna be, but the probability goes to the sellers. Yes. Check this was previous supply zone. And it is rare because you get this in higher time frame, in the highest time frame, which is month. So it's rare. This is a supply, meaning sellers always push market down from there and then push it. Sellers always push market all the way down from there. I didn't mention rare supply, demand, or rare support and resistance, but I was actually talking about rare. I'm actually talking about fake. I'm talking about fake support and resistance, or fake supply and demand. Yes, because it is what makes you do so. But in as much as you spot fake support and resistance, or supply and resistance demand, try to spot real support and resistance, or demand and supply respectively. Try to spot them. I get it. Try to spot them. I say it again and again. Try to spot them, because if it is real, then it's going to make you profits. If it is fake, you're going to blow your account, because you always trade what tells you. If fake tells you fake, then you lost. But if the real tells you something true, then tells you something that is real, then it is gonna give you a real profit. So let's check the week. The week is bearish. I think the week is bearish. Now, one characteristic behavior of price action is that market behaves in impulse and retracement impulse, like for a trending market. So we confirm that this market is in a downtrend. So this market must have retracement and then impulse. Like it must have a retracement, then impulse. Like it will retrace and then it will impulse. Like when it retraces here, it impulses like this. And an impulsive move must take out previous swing point. For this downtrend, this swing low was taken out. Are you getting it? So okay, before I continue again, I have not finished the fact that there must be retracement in a trending market. So those retracements, it is those retracements that create fake resistance and what support. If you go to lower time frame, you will see those fake resistance and support that are created during retracement. So let's go. I want to show you this because we are talking about fake resistance. So you will see it in H4. Are you getting it? You see it in H4. You see this. Let me use a channel. You see this whatever that is included or covered or bounded by this channel are whatever they create, whatever scenario they create, whether they create support or resistance, whether they create uptrend or downtrend. Like everybody know that in higher time frame, like daily or weekly, like the weekly. Yes, in the weekly, this is the weekly retracement. Whatever they create is gonna be fake. That's the truth. If we are a very long-term trader, because if you trade long-term, if you trade a long-term signal, like if you trade higher time frame signals, you have edge in the market than somebody that scalp. Because a scalper can blow account from time to time. Even a day trader or like somebody that trades, whose trade lasts within a day to 2 days, like from a day to 2 days, or from some hours to a day, like such people. Like if you are a scalper, like you close trade in minutes, in seconds, in few hours, and you hold your trade for more hours and up to a day or 2 days, you fall. Like if you hold for many hours to few days, you fall under a day trader. But if you hold for few minutes, few seconds, and few hours, then you're a scalper. But as a swinger or long-term trader, you actually hold your trade for a week, months, or years. So I prefer being a swinger and a day trader, because I'm not going to play accounts. I'm not going to have negative statistical edge. But if you are going to scalp, then you have to use high-level risk management to maintain your statistical edge within 5%, at least within 5%, and it must be plus, not negative. I get it. So this is fake. Whatever support, whatever resistance, whatever trend creating here, they're all fake. That's true. For those that are swinger, they're all fake. For scalper, it's gonna be real. For day trader, it's gonna be real. But for swinger, it's fake. And if you're a swinger, you know that you'll have 10% up to 20% or more statistical edge in the market. I'm telling you the truth. Okay, so see what happened. You see how they break the channel. See what happened? To show you that it's fake. It finally break. A lot of people, even no matter how you make profit, buying. If you didn't close in time, or because I know you will buy, you close, you take profit here, but likely you are going to buy here and place your stop loss somewhere here. What happened? It is triggered in real time, because you are buying because you think that this is uptrend. You think that this is uptrend. Who tell you that it is uptrend? You just think it's uptrend, and you are buying. You think it will gonna get higher high, because you know that uptrend must be higher high. But what happened? Breakout. Blow all the profit you have made here, because I know you will use more lot size, because you have made some profit. Then you increase the lot size. You might have lost everything because of the triggering of the stop loss at this level. I get it. Depends on your risk level. So try to know all these things. So I'm going to emphasize more on this polarity. What I mean by polarity, on a bearish polarity in the week or month, when the polarity of the week and the month are the same, in the direction, and it is also confirming the trend. Look for signal in the direction of that polarity. Like if the polarity of the weekly or monthly candle is equal to the polarity of the trend, look for signal in the direction of the polarity. For instance, the monthly is bearish, that is red. The weekly is bearish, that is red. And the trend is downtrend. And you already know these are fake retracements. Retracements are fake signals, because they doesn't last. Whatever they create are all fake. Yes, they show you illusion, but in real time, all the levels they created are going to be forgotten and rejected. Price will run away from them. I get it. So try to be aware of all these things I have mentioned in this video. Okay, so trades in the same polarity as of the week, of the month, or as of the trend. Once trend, week, month have the same polarity, trade in that direction. Avoid whatever information the retracement offer you, especially if those retracement is very serious in the week or daily or H4, because I'm using week here to see this retracement. It's better you use week and daily to spot the retracement, and know that whatever information they give you is gonna be fake. Look for a swing point in the direction of the main trend to do what? To trade. to trade those nonsense manipulations, because they are manipulating that market to the retracement. Yes, so try to avoid it, and then see the actual place you should buy. I'm sorry, you should sell in the downturn, because this downturn you should sell here. This is the potential. This is sell potential. This sell level. This sell zone. This sell. If you sell here, I'm telling you the truth, you will make big money, more than somebody that has been trading or scalping for many months. I'm telling you, because that person will not even make any money. He will play account from time to time. You see, over 160. Imagine buying 10 lot size. That's over $1,000, and opening up the 5 position. You see how much you make on a, let's say on a $500 account. We might take $500 account to a couple of 5,000, a couple of 5,000 plus. Imagine, because you know what you are doing. For those that are buying here, you see how the wicks, a lot of wicks are forming during that retracement. You're gonna be, your stop loss is gonna be triggered. You have small equity and you want to grow it, so you have to be wise. You have to do the right thing. You shouldn't fall in the hand of the fakers or manipulators. Deriv manipulate market so strong, so you shouldn't fall their victim. I'll be ending this video, but for your own good, join my VIP. This is 30 minutes video. I know why. I want to make you people stop losing. Enough is enough. Okay, bye for now.
If you're prepared to break the silence.